Well, first up, let's get you all the market action for the day. The bulls were back in action on the Lal Street after yesterday's fall. We saw Nifty falling just below 11,600, while the Sensex is within touching distance of 29,000. Both those indices ended up over 1%. The broader markets rose in line with the benchmarks, with the banks seeing renewed interest. That index gained over 400 points. Now, mid-caps followed suit, so there was no volatility or selling seen on expiry day. And for this series, the Nifty and Sensex ended close to 5% higher. Let's bring in Surbhi Upadhyay, who's here with a wrap of today's trading action. Surbhi.
Well, the bulls were back in the ring today, and they did so in style. The series ended with the Thursday expiry, a series that's been a roller coaster ride, started with gloom and doom and is ending on a high of optimism. And that is exactly what this Thursday was all about, because whatever fell sharply yesterday, that's where the buyers were queuing in. And that's why you know that this is really right now a buy on dips market where the optimism is still very much intact. Some of the themes in the market that are playing out quite smartly include, of course, PSU divestment, and I'll talk about that in more detail in just a bit. We saw a lot of surge on Vedanta and Hindustan Zinc because of reports and the hope that maybe the government will finally be able to divest more of its stake. So those were active stocks to look at. Auto stocks, which were badly beaten down on the fear around the discounts. Again, the buyers were queuing in, and that's what's telling you that this is the market psyche at this point in time. You want to go in and buy every dip. Today's gainers, M&M. Financials, which were being lapped up, ICICI Bank, IndusInd, SBI, Maruti as well had a great session today. And then you had a lot of other leaders. I mean, the big boys club was buzzing. Look at Reliance, look at ITC, look at what, for instance, L&T was doing. These stocks were up between 1 and 2%, only aiding the bulls' cause. Now, examples of the PSU push, there is such a flurry in the market around the next form that divestment is going to take. Look at Coal India or ONGC or BPCL hitting another 52-week high today. HPCL go one rung down. Shipping Corporation of India, 6-7% up here as well. Engineers India, BEML. I could just go on and on, naming every single PSU stock out there. Finally, what slipped a bit was Yes Bank because of continued uncertainty around whether there's a new investor coming in or not, and what Mr. Rana Kapoor is doing with his stake. Indiabulls Housing Finance saw some slippages towards the end of the day's action. And IT is in a sort of a very rotational trade at this point in time. And today, since the excitement was back on the rest of the market, IT was in a losing spot. But otherwise, it's been a very positive end to what was originally a very bleak series.
Okay, Surbhi, thanks for that. Let's talk about why the equities were up and about in trade today. Our Prime Minister Narendra Modi has said that India will make efforts to bring tax on equity investments on par with global tax regime. The PM has made this commitment while addressing a gathering of American business leaders in New York last evening.
टैक्स से जुड़े कानूनों और इक्विटी इन्वेस्टमेंट पर टैक्स को ग्लोबल टैक्स रिजीम के बराबर लाने के लिए हम जरूरी सुधार निरंतर करते रहेंगे.
And more from the taxation space, Minister of State for Finance Anurag Thakur has said that the government will take a call on personal income tax rationalization when the time comes. The minister made the statement during an interaction with the media in New Delhi earlier today. Remember, last week the government had announced a drastic reduction in corporate tax rates, which also triggered the demand for personal income tax cuts by some people.
To have more investments in the country, to give impetus to the growth, I think the government has taken such decisions which will bring in more investment into the manufacturing sector to create more job opportunities. We have done so, and that has been taken well, appreciated by the industry and the media. When the time arises to take a call in that area, the government in the past has also increased it from 2.5 lakhs to 5 lakh rupees. In future, the government, whenever the time arises, will look into the matter.
Now, several headlines coming in from the divestment space. Sources tell CNBC-TV18 that the government is likely to target 50,000 crore rupees from asset monetization in the current fiscal. Sources also tell us that a consolidated cabinet nod will be sought for strategic divestment on 5 central PSUs. Not only that, the central government is also believed to be open to sell residual stake in Hindustan Zinc via an offer for sale if there is a favourable verdict from the Supreme Court in the case. Sapna Das has more on these news breaks. Sapna, take it away.
Well, as is very obvious, I suppose the government is stepping on the gas pedal as far as the disinvestment program for the current financial and possibly the coming years also is concerned. So, of course, the first key takeaway is basically the plan on asset monetization. We're given to understand that already a committee under the Cabinet Secretary has been set up, comprising, of course, of representation from the Finance Ministry, DA as well as DPAM, and also comprising of other administrative ministries which will take these decisions forward. Basically, the focus of this committee is primarily on monetizing core assets. So these would be, your transmission lines, your gas pipelines, maybe even telecom towers. There will be a huge list on that. There's a process involved, so you have to wait and watch and see how quickly that goes forward. But I suppose the government is being pretty optimistic about this, and possibly they may be looking at a target of up to 50,000 odd crores in the current financial itself. Having said that, the second factor that that we have already spoken about, the strategic stake sale of the 5 CPSEs. Well, we are clearly given to understand that possibly a consolidated nod will be sought from the cabinet for all the 5 companies, and while that process is on, possibly the government may also work on the parallel exercise of appointing transaction advisors, consultants, because each and every stake sale will have a different transaction value. So all of those details will work out, but this appears to be in the fast lane, so that is important to note. Possibly the government would like to conclude at least one of the transactions out of these 5 CPSEs in the current financial year. The third, of course, is possibly even a fresh look at selling residual stake in Hindustan Zinc, but of course there's a legal tangle there. So the government would possibly wait for a favorable opinion from the Supreme Court, if any. I suppose some informal discussions are already underway. Obviously the government holds around 29% in HZL. So once the favorable judgment comes in, and it's all caveated on that, basically, the plan possibly would be to look at an OFS route, for selling the residual stake in Hindustan Zinc. So possibly that case also could get revived, and a fresh look maybe in the pipeline. So these are the 3 key things that the government is working on. And of course, last but not the least, there's already a proposal underway to pare government shareholding in select CPSEs to below 51%. That will also help the government reset its ETF baskets. The CPSE and the Bharat 22 already, where their shareholding limits have actually come down. And of course, the next tranche of Bharat 22 is 3rd and 4th October of a size of 2,000 crores. And then they will wait for the subscriptions to come in and then decide on the green shoe option.
Okay, Sapna, thanks for taking us through all those exclusive details. But speaking of exclusives, here's another one from the debt resolution space. Sources tell us that the government is mulling the creation of a special window for resolution of NBFCs under the Insolvency and Bankruptcy Code. Now, these rules are expected to be notified very soon. Timsy Jaipuria is here with more. Timsy, take us through the details of the government's plan here.
Well, what we are given to understand from government officials is the fact that government is preparing a mechanism to deal with NBFCs under the IBC. Now, this mechanism will be in form of a special carve-out under Section 227 of the IBC, which will provide special dispensations when it comes to who can trigger the case, to resolution professionals, for the moratorium as well, because to keep this entire case of NBFCs away from the regular IBC process. Now, government is very clear that it has to have a calibrated approach to deal with certain cases and certain classes of cases which it will mention in this special dispensation when it comes to dealing with NBFCs under IBC. Till now, NBFCs did not have any special treatment under IBC, and they could not have been taken under IBC. Also, what we understand from government officials that government need not go in for a cabinet approval for this. Government can do this just by notifying new set of rules under this particular section. Also, what we are given to understand that this entire move to have a special dispensation comes after cases such as DHFL came to the fore, and government decided that to deal with such cases in future, whether DHFL or not, is something that government should bring out more clarity on. And yes, not to forget, such cases which can have a huge impact on the economy. So government wants to be well prepared in advance by this special window to see how best it can deal with NBFCs, etc. when it comes to IBC process. Let's see how soon these rules are notified, because government officials say these rules can be notified as soon as within next 2 weeks. We'll keep you updated on it. Back to you.
Okay, Timothy, thanks for joining in with that. But staying with the debt resolution space, banking sources tell CNBC-TV18 that the lenders of debt-laden DHFL have decided to proceed with resolution plan under the Intercreditor Pact, or the signed as per the June 7 circular by the RBI. Now, DHFL has already presented its draft proposal to lenders, and they have to now study and finalize it. Ritu Singh is here with the details. Ritu, the stock was, of course, battered at the back of that story. Take us through the lender's plan and the draft proposal submitted by DHFL.
Well, critical lenders have decided to go ahead with a resolution plan in that, they will finalize it and begin voting on the resolution plan, irrespective of the other players coming on board immediately. Banks hope that, if the banks are able to pass this resolution plan with the requisite majority, they will look to mete out similar treatment to other mutual funds, insurance and pension companies, as per the basis of the decision on haircut that is taken within the Committee of Creditors on the basis of the security collateral that all of these classes of creditors hold. So that is the plan to go ahead with it. EGM, that is DHFL's EGM, is expected to be held over this weekend, and that is when some critical approvals are expected, which will enable the lenders to be able to take equity in the company. And once that happens, the final resolution plan will be floated among lenders for their voting, for individual board approval. The draft resolution plan, as we had reported, involves banks taking up to 60% equity, promoters stake coming down to below 10%, and also some fresh loans that will be given to the DHFL.
Okay, Ritu, thanks for that. We'll take a short break on that note. Up next,